Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta Exchange. Both US markets and Indian markets, they are like a running car on a highway without any brake, just moving non-stop. And do not know when both of them are going to get into some kind of accident. If I'm not wrong, we may meet with some accident on 23rd July. That is on budget day. Last 12 trading sessions. Out of the last 12 trading sessions, 11 trading sessions Nifty closed in green. Just only one day, that was yesterday, that too just because of HDFC Bank, Nifty closed slightly lower, I think about 3 or 4 points lower. That's it, not a big deal. Otherwise, today for 12 straight days, market is higher. And today, who would have expected more than 100 point closing? It was a fantastic rally. Today, the rally was mainly triggered by auto stocks. Uttar Pradesh government seems to have reduced tax or abolished road tax and registration cost for the hybrid cars. So that news triggered a rally in Maruti because Maruti is the major beneficiary. They produce a maximum number of hybrid cars. And other auto stocks also did well. And then already, the overall market sentiment was good. And today there is this good news. And then market shot up more than 100 points. So for the first time, Nifty closed above 24,400. I think markets are entering slightly into euphoric zone. This kind of rally, especially ahead of the corporate results and ahead of the very big event budget, is actually not really very good. And today I'll tell you some significant things. Number one, today on the 12th day, Nifty was up more than 100 points. Not every day more than 100 points, but 11 days it was higher. The 12th day it's more than 100 points. And number two, the VIX is higher. Usually when the market goes higher, the VIX will have to come down. But today VIX also moved higher. And third, first time Nifty closed about 24,400. And the fourth, the option premiums, 25,000 call option and 24,000 put option. So call premiums are shooting up, but put premiums are not coming down. Especially that is very much visible in December options. Call premiums are shooting up like anything. Put premiums are not at all coming down. Last but not least, today, first time, the put call ratio has gone above 1.5. As of today, monthly options put call ratio stands at 1.54. Which means that people are becoming complacent. They are just closing their eyes and selling put options. So what happens if there is any bad news, market falls suddenly, all these people have to run for cover. So, the markets may fall by its own weight. But as of now, there are no signs. Even today, the mutual fund data came. And the last month, the money that was flowing into the mutual fund was the highest, about 40,000 crores. But however, there was less money flowing into mid-cap and small-cap mutual funds. I think the froth is already there. Major money is because of the new fund offers. So that's one thing. Another thing, today is the talk of the town is the SEBI committee recommendation. They broadly recommended three things. One, this only one weekly expiry per week per exchange. That is really a good idea because, everyday expiry, then, everyday expiry, the people becoming more gamblers. And then, like some foreign hedge funds, they come and do the injection stories. They make a lot of money and they don't pay tax to Indian government also. So therefore, restricting to 1 or 2 weekly expiries, just like those days. Those days we used to have only Nifty weekly expiry and Bank Nifty weekly expiry. That's it. Then came Mid Cap Nifty, Fin Nifty, Next 50, Mid Cap, Sensex option, and then Bank X option and all these expiries. So one thing that is good. The second one is, minimum lot size now stands at 5 lakh rupees, but that may be increased to 20 to 30 lakh rupees. I would agree to some extent. So this one, but anything you do, there is going to be some kind of a side effect. Then some smaller option sellers, because they don't have the enough capital, they may turn into option buyers. So whatever the SEBI does, they are only targeting the option sellers. So option buyers, there is no restriction. So then, some smaller option seller also become option buyers, then there will be even more gambling. But that is not avoidable. And the third one is higher margins closer to the expiry. To me, it is unfair. And I trade mostly in long-term options. You trade in more than 9-month option, long-term option also you pay 50% extra margin money. That there's a 5% extra exposure margin. So that will effectively translate into 50% higher margin money. Then you trade in long term also you pay more margin. You trade in short term also you pay more margin. Then you only trade the medium term. Of course, you like to trade medium term, but then medium term become a short term. Then your positions are not favorable. You are not able to square off. Then there will be a problem. But I would suggest extra margin money for intraday traders. That is acceptable because most of the speculations are happening there only. Right? So the SEBI may consider increasing the margin money only for intraday traders, but not for the positional traders. Again, practically they have to find out how they can classify intraday and positional and all those kind of things. So anyway, so these are all only recommendations, but not the final one. So we will see when the final thing comes. But in another circular from NSE, there are about 2,500 stocks trading in NSE. So they have almost more than 1,000 stocks. They removed from the list of collateral stocks, which means that now you cannot buy a share, give it as a collateral to the exchange, and based on that collateral you can't trade in options. And that is more than 1,000. That is almost 40%. I think it is already there are about 150 to 200 stocks that are not eligible for collateral. If you take that into consideration, more than 50%. So, as a side effect, what may happen, those people who are holding these shares, gave it as a collateral for trading, they may offload these shares and they may buy the blue chip stocks. If that happens, Nifty will go even higher. I think, Nifty is heading towards 25,000 on or before budget. Then what is going to happen after the budget? Only Nirmala Sitharaman knows. We don't know about that. But the way markets are looking and moving higher, with this kind of optimism, like this kind of SEBI committee recommendation, had it come in a normal market or, bear market, markets would have fallen like anything. But you see, now markets are totally ignoring any negative news in the markets. They just simply want to move higher. So anyway, so we have to see where the market will be headed. And FIIs and DIIs both are net buyers today also. But of course, FIIs, they just bought for 300 crore, but the domestic institutions have bought for 1,400 crore. So structurally, markets are looking bullish with a target to 25,000 and a monthly. Of course, weekly, as I told you, 24,000 to 24,500. We still have 2 more trading sessions. We are still only about 70-80 points away from 24,500. So we are clearly at the upper end of the trading range. So some kind of a caution is advised here. But I keep saying some kind of caution is advised, but the market keep moving higher. So that cannot be helped out. So markets, clearly is a buy and dip, not, sell on rally mode. So anyway, there is nothing much to discuss today. We will discuss tomorrow morning rest of the things. Hope you enjoyed watching this video. Thank you for watching.